I think many of us have a tendency to think that maybe there's a possibility at some point in time in the future that there could be an economic wave that's going to take out our investments. So I figure, why not just create a list of ETFs that I think will withstand the test of time? If you put money into these over a long-term period of time, or if you just buy them and hold them over a long-term period of time, I think these ETFs are going to hold up very well. Now, I'm only talking today about ETFs from Schwab. You could go out and you could buy these ETFs with Vanguard, Fidelity, Robinhood, M1 Finance, any platform that you use, you can buy these ETFs. Now, the first ETF is up over 44% over the past 5 years. Our next ETF is up over 42% over the past 5 years. Now, our third ETF is actually down about 0.15% over the past 5 years, and we're gonna discuss this and why this still makes the list. Now, I'm gonna start with these first three ETFs, then I'm gonna move to the next three. Now, why is that? Well, remember, we're going to talk about the best ETFs to buy and hold forever, not just for a few years or a few months or something like that. We're talking about forever. So what we need to do is we need to have a broadly diversified group of ETFs to talk about today. And so then what does that mean? Well, it means that we're going to talk about broad ETFs to start. So the first ETF I have for you that you could potentially buy and hold forever is called SCHX. This is the Schwab US Large Cap ETF, and it's got a very low expense ratio of one of the lowest that you can actually find in ETFs, and it's 0.03%. You don't get much lower than this ETF expense ratio. And after that, we have a distribution yield of 1.54%. So think about dividends, right? The stocks that are inside this portfolio, they're going to be generating income and they're going to give you some dividends. And so you're going to get a distribution yield. Some of these ETFs are going to pay quarterly, some are going to pay semi-annually. This one is going to be paying quarterly. And so every quarter you're going to get some yield. You're going to get 1.54% for the year total. And the annual income, if you invested $10K on this, is $154. So this is our first broad ETF that we're talking today. I'm going to show you why this is considered a broad ETF in a second, but let's go to our next ETF, and we're going to go with SCHB. This is the Schwab US Broad Market ETF, and it says broad because it actually is investing in basically the entire stock market. Instead of just the top, few hundred largest companies, it's going to be investing in the entire stock market. So you're going to get a lot of stocks in this. I'm going to show you how many stocks in a second, but what is the expense ratio? It's super cheap as well. 0.03% expense ratio, just like SCHX. And we get a distribution yield just like SCH as well. Very similar. It's 1.51%. So you're going to get a bit of a distribution yield. It's not huge yield, but it's decent. It's not that bad. And then it's going to pay quarterly as well. You're going to get annual income on $10,000 of $151 per year. Now, our third ETF out of our broad ETFs today is the SCHF ETF, and this is the Schwab International Equity ETF. This is going to be investing in international companies outside the United States. This also has a very cheap expense ratio, 0.06%, a little bit higher than SCHX, SCHB, but that's okay. It's not that high. It's actually a very, very, very low expense ratio still. And so it's got a distribution yield of 2.59%. This one's actually paying semi-annually. So if you do care about quarterly dividends, well, you're going to have a little bit of an issue maybe. You're not going to get this 4 times a year. You're going to get this 2 times a year, but you're going to get more money over the year. And if you invested $10,000, you're going to get $259 per year. Okay, let's talk about how many holdings each of these have. And by the way, you want to stay to the end of this video because at the end, I'm going to show you what a portfolio looks like with all of these different ETFs combined and how that actually does versus the individual ETFs. So stick around for that. So the next thing we're going to do on these 3 ETFs, SCHX has holdings of 762 total stocks. It's a big portfolio of stocks, but they're the larger companies inside the stock market. SCHB is also very similar in the fact that it is a broad market ETF, so it's got a lot of different stocks, but this is even more broad. It's got even more companies in it, 2,408 stocks. So is it diversified? Absolutely. It's extremely diversified. So you're getting tons of stocks in this. And then SCHF is different in that it is a foreign ETF. So you're investing in foreign companies, not companies inside the US. And you have 1,566 holdings. So again, extremely broad ETF. It's got stocks from all over the world. And we'll take a look at where they're from in a second. But before that, I want to show you the top 10 holdings of these ETFs. So you have Apple for both SCHX and SCHB, right? So these are going to be investing in the biggest companies in the world for like the highest weighted parts of their portfolios. And then you got SCHF over here. This is investing outside the US, right? So I told you that this was actually down, or it's pretty much flat over the past 5 years. So why did I include this ETF? Well, this is the reason here. So if you take a look at the different time periods that you could have invested in international stocks. So let's say stocks outside the United States of America. How do they perform? Well, whenever this is above the line here, so in the blue, this mountain chart is above the line, that's when the US is outperforming. It's when it's below the line, it's when international is outperforming. And we're going all the way back to 1975 here. So let's take an example. Over here, This part right here, this 11.1 years going up until last year, 2022, the US was actually outperforming over that time period. However, things have now changed because international stocks did pretty good last year. You would have done better than if you had just invested in stocks that invest inside the United States. Right now, we're comparing these three ETFs together. And of course, the ETFs that invested in the US are actually outperforming over the past 5 years, right? So you have this black line, which is SCHX. That's the one that invests inside, let's say, the larger cap index in the US, kind of like the S&P 500 with a little added extra few companies in there. Then you have SCHB, the one that is investing in, let's say, the total stock market. And so SCHX has outperformed a bit versus SCHB, but then you have down here SCHF, the foreign ETF, that actually is only up 15% over the past 5 years. So what happens though when we go into the 1 year time period? Well, we could see it's actually a lot closer, and we actually can see, funny enough, SCHF is now outperforming over the past year. I mean, it's still down 4%, but it's still outperforming. And then if we go year to date, we can see that SCHF is still outperforming so far year to date for the year 2023, which is interesting. So it's almost up 6%. But again, they're all very close right now. Okay, let's go over our next three ETFs. And again, remember, I'm going to show you how portfolios look with these different ETFs inside them. We're going to compare them like that. But I want to talk about why I'm going with these three next. So there are different styles of investing, right? You could be someone who likes dividends. That could be a style. You could be someone who likes value stocks. That could be a style. Someone who likes growth stocks. That's a style. So here we're looking at a chart that shows us what is outperforming when interest rates are rising. And just to show you that there are times where certain styles, certain themes actually outperform. And what I want to show you today is, first off, we have value. Value tends to outperform when interest rates are rising, as you can see, because it's on the right side of this line here, right? So this is on the right side of the line, meaning that it outperforms usually when interest rates go up. Now, on the other hand, we have growth, right? So growth is on the other side of this line, which means it doesn't usually do as well when interest rates are rising. This makes sense. Last year, value actually did better than growth. Will that happen this year? I'm not sure, because maybe interest rates will stop rising this year. I don't know which one's going to do better. So I'm just showing you that this is why we're talking about this. Sometimes certain styles outperform others, and that's why some people do this. Now, next we have, of course, our styles, and we're going to go over three here. First off, we have SCHD. SCHD is a bit of a cult following. It's the Schwab US Dividend Equity ETF, and many people love this ETF because it's performed very well, and I've made videos on this ETF before. If you watch my channel, you know that I talk a lot about SCHD. I actually own some SCHD. The expense ratio for SCHD is 0.06%. So it's not a high expense ratio. It's very cheap as well. We have a distribution yield of 3.32%. So this is what we're talking about. SCHD, the dividend, the D in SCHD stands for dividend, and dividend is what you're getting with this. You're getting high yield. So what you get with high yield, 3.32%. If you have $10,000, you're getting $332 per year. Now, this is way better than the other ones we talked about before, the broader ETFs, maybe $150, $200-ish dollars in per 10,000 that you're going to be getting in yield. So much better. Then we have SCHG. SCHG is the Schwab US Large Cap Growth ETF, an expense ratio of 0.04%. Also very cheap, of course. We got distribution yield of 0.50. Now, here we go. Huge difference, right? Why would someone want a lower distribution yield? Well, it's because they want more growth, right? So growth companies tend to not have as much distribution. They're reinvesting all their money into their company, right? And they're trying to grow it as fast as possible. So what you're doing there is you're trying to get capital appreciation. You're trying to grow the money you put into this ETF and not care as much about the distributions that come off of it. And then an annual income of 10K on this only give you $50, right? So huge difference there. But again, you're not investing in SCHG to get yield. You're investing hopefully because you want capital appreciation and growth. So next up, SCHV, we have the Schwab US Large Cap Value ETF, the expense ratio 0.04%, same as SCHG. Distribution yield 2.28%. So this one does have a decent distribution yield as well. Not quite as good as SCHD, but pretty good. And the annual income on this is $228. Now those three ETFs, actually, they all do pay quarterly dividends. So that's good if you want quarterly income. So the only one so far is SCHF that's doing a semi-annually. Everything else so far is paying quarterly dividend or quarterly distributions. Now, SCHD has holdings of 104 holdings total inside its portfolio. 104 companies are inside SCHD. It's a pretty good diversified portfolio, but of course, it's not as broadly diversified as some of these other ones here. You're getting more concentration in SCHD. SCHG, you're getting 247, right? So you're getting a lot more. You're getting 2.5 times almost more stocks inside SCHG. And then we got SCHV, 520. So you're getting a lot of stocks in SCHV. So that's, again, pretty diversified portfolio. Looking at the top 10 holdings in these ETFs, you're going to see these are going to be a bit different than what we saw in the first one, where we had the SCHX and SCHB. They're pretty similar top 10 holdings, right? So these are more growth tech-oriented companies. These are more traditional companies in other sectors like energy, banking, insurance, healthcare. So you got all of the different sectors in these different ETFs. Now, if we take a look at the returns of these ETFs, we could see this is over the past 5 years. The SCHD is actually outperforming these other two ETFs with the biggest distribution yield that it's paying. And now when we put all of these ETFs together, we go back 5 years and we see the returns. Well, we could see that SCHD is the outperformer so far of these. It hasn't always been, of course. These green ones like SCHX and SCHF, they were outperforming for a while, of course, and then SCHD has held up. Now it's doing better than all of the ETFs we talked about today. So what we're doing here is we're saying, okay, let's take a look at 3 different types of portfolios. One portfolio is just SCHD because that's one that's done the best over the past 5 years that we just looked at. The next one is pretty much equally weighting every single ETF we've talked about. And then how does that compare against a portfolio of just the growth and the value? It's SCHV mixed with SCHG. So here we could see that, yes, SCHD did the best. $41,000 is the final balance of $10,000 invested. Basically from 2012 until today, that's the return, right? So if you invested $10,000, you got $41,000 SCHD. The portfolio of all of these combined got $36,000, and then the next portfolio is $39,000, which is the blend of the value and the growth together. Now, this part is to show you that you can't always just go back and assume that one portfolio is going to continue outperforming forever. And so basically, if we take a look now and we stop at 2018, what would have happened between the year 2012, the start of the year, until the end of 2018? Well, SCHD grew to 29,901. Our portfolio of all the stocks together grew to 21,308. So pretty much very similar. And then we had 23,000 for the blend of the growth and the value. So the growth value blend actually outperformed the other two at that point in time. Now you could just go with one of the broad ETFs. That's okay. Or you could supplement it and you could go also some SCHG, SCHD, SCHV, or SCHF, or all of them together and have a more diversified portfolio of ETFs. So thanks so much for watching, and watch this video here if you want to see the best Vanguard ETFs to buy and hold forever, and disclaimer here.